Hello and welcome to my stock market outlook for the week of January 24th, 2021. And this video I'm going to be looking at a little bit of the market outlook for this week, as well as the stocks I have picked out to trade if I get trade triggers. So let's get right into it. Okay, so looking at the SPY, here's a quick update of my outlook on the SPY. Now, we're still, building up within this megaphone pattern, and we're riding right along this kind of critical area of, I guess, this upper trend line, which could be a point where the market corrects. You can see we broke above this level last week a little bit, and we're sort of riding just above it. So I'm wondering, is it going to be a retest and a breakout higher? Is it going to be a breakdown into this level? Are we going to just ride along this level for a while before the market decides what to do next? There's some different possibilities, and so we'll just have to keep an eye out for what plays out. It's really a delicate area right now, I think. Probably it's the highest risk area to be long in the market. So that's something to take into consideration for this week. Okay, so looking at the NASDAQ tracking index, we have a similar story where we popped just a little bit above the trend channel that we've been in for a couple months, and we don't have an impulsive breakout. We haven't broken back in yet. We're just sort of at this kind of higher risk area right now where we may break higher, we may, have another big run, or we may break back into this range. We just have to wait and see. Okay, US dollar index. We are towards the bottom of this range here, moving towards a long-term $88 support level. Do we have support above there? I think we do. So we went down, tagged this lower level of this falling wedge, and then we are moving up again. So the question is, will we break out of this rising wedge pattern? We do have positive divergence on the RSI, or I guess bullish divergence. And so we'll have to see if we break out of this falling wedge pattern. Right now, it looks like it's likely to move lower and tag the bottom of this falling wedge again. Now, what I've been saying, or I guess my thesis has been, is that the rising dollar can lead to a pullback in the market. I'm not so sure how valid that is anymore. All right, so what do we see in gold? We are basically range bound in this channel that we've been in since August of last year. Right now it's looking like it was thinking about maybe breaking out or just moving to the top of this channel. I don't think it's going to try to break out again, at least not anytime soon. It may be another week, 2 weeks, 3 weeks, a couple months before we see this move higher. For now, I think we see more downside, just because, we've had some upside to the gold price, but it wasn't really impulsive. There doesn't seem to be any conviction with it. There doesn't seem to be any reason to be going to gold right now, other than the fact that inflation expectations are sort of at all-time highs. The gold price, I guess the fear isn't quite there yet, though. Yes, everyone expects inflation to go crazy, but they're flocking to risk assets rather than, the low risk assets like gold and silver, at least right now. So gold continues to cool off. We'll see where it goes next. I think we're going to see more downside in the next week or two. Just a quick note for the next part of the video. I'm probably have no idea what I'm talking about, but I like to look at the charts. I like to learn about, as much as I can, about how these sorts of market mechanisms work. So even if I am completely wrong about this, I want to keep this in here for record down the road to see how I progress in terms of my knowledge of how the Treasury yields work, how the Federal Reserve manipulates these yields, and how those yields drive the stock market. I've been listening to a lot of people who seem to have a better understanding about how the market and interest rates and Treasury yields are related. And so as I learn about these things, I want to, post my progress in these videos as I go. Okay, so right now I'm looking at a chart of the US 10-year bond yield, Treasury yield, as well as the SPY, which is in orange. And really what you notice about the 10-year Treasury yield is, I think what you would expect is basically rates have been going down since this chart or data set started. The yield has been going basically in a pretty clean downward channel. Only a few times have we popped above or below that. And it's interesting to note that the times what do we notice about the times that we popped above? In the 2008 crisis, we popped above for just a little bit, maybe a couple months to a year before this downturn that created the Great Recession started. And then most recently, we popped above in the yields as we were going into, I guess, this 2018 downturn. So it looks to me like we're just locked in this downward trend for interest rates. If we bring interest rates up, or the 10-year yield up, then the market goes down. If we want the market to keep going up, we have to keep making money cheap to borrow, which is basically the 10-year yield driving interest rates down. Right now, we're at such low interest rates. If we get rid of this SPY, we're at like 1%, 1.1%, and we dropped as low as 0.5 to 0.4 to 0.6% at the height of the last market crash. So right now, we're retesting, I guess, this trend line. I think, the probability says we're going to bounce off of this and the Treasury yields are going to go down. But if we pop above this, I think that may be a big red flag for the market. And let's just go back to bringing the SPY back in. When did this downtrend start? Was it right when we popped above? No, not really. We were able to pop above for a while, and then it wasn't until we really started getting back into the rates we saw 2013 to 2011, I guess 2011 rates, that the market started to react negatively, at least significantly negatively. We started to see a reaction here to the market, a little bit of instability, and then it really turned down here. And since then, since I guess 2018, we brought rates down. That sort of allowed the market to continue in its upward trend. But then this latest crisis happened, and that forced us back into this range. So it'll be interesting to see if we break above this again. I think that's a big red flag for the market. Something to watch out for, because it could mean a few months to a year down the road after we pop above in interest rates that we're going to see a really sharp downturn in the market. We're just seeing that the market isn't sustainable without keeping rates at rock bottom and going lower. I kind of wonder, there's been a lot of talk about going negative with the interest rates. We'll have to see if that happens. Okay, so here's just the 30-year yield on a logarithmic chart. And you can see 1987, our rates were at 10.9%, or the yield was around 10.9%. We brought it all the way down to 0.8% at the bottom of the crash. Or I shouldn't say we brought it down, but that's the low that it reached. So I kind of wonder, could we make it all the way back up to the top of this channel before we start to see market weakness again? That would be a big surprise if we did. But historically, they've been able to do that. 2008 brought rates way down, and then we brought rates almost up to 5% through 2010. And they've sort of just been walking down this range. But what's interesting is we broke below this range for quite a while since, basically almost a year. We broke below this range in the yields, whereas the previous crisis, it was only a couple weeks. So that's interesting to note. My expectation is that we're, just based off the probabilities of what happens when you break down and then break back into a range, the expectation is that we stay in that range for a while longer. I guess the question is, if we move to the top of the range, will that mean significant market weakness? Will, the market be able to sustain itself? As far as who controls the rates, the Fed does a lot to influence the rates, but at the end of the day, I don't think it has absolute control over the bond yields. It can influence the yields by effectively purchasing those bonds, but it can't dominate those yields. And so if there's other forces at play that force these yields up, it may come to a point where the Fed is not able to continue to keep the rates pushed down. But that's speculative, I guess. Speculative on the macro level. Alrighty, so I have a bunch of stocks to go through that may be potential trades for this week. So let's get right into it. The first one is Pinterest, PINS. We have several weeks of an uptrend, negative divergence on the daily chart, and a nice profit target here at the support level. Sort of a gap fill, not quite, but I don't think, well, I think it's a good risk to reward ratio trade if this one plays out once we break trend line. Next one is GRWG. This one is same story. It's doing a back test of, well, it might be doing a back test of the trend line. If it does, that's a good entry point for a trade all the way down to 21.32, that level-ish. There's not much good support until then, so I think that's a good risk to reward trade. Next trade is HGV. This is another gap fill trade. Basically, we've had a bunch of flat movement for a good part of last year, then a gap up, an uptrend, and it looks like this uptrend may fail. It's not strong negative divergence yet, so it may take some time for this trade to play out, but there is a nice gap to fill down here that gives us a profit target and a good risk to reward ratio. UA is the next trade I'm looking at. This one is an unlikely trade, but if it does play out, then it will have a very good risk to reward ratio. Basically, I'm looking, after it broke trend, I'm looking for a back test of the trend line. The reason I want to see a back test is because there's this gap back in February of last year that may be filled. And I'm expecting once that gap is filled that this stock will capitulate and move down to this 1069 level. NTLA, this is another trade I'm looking at that's for a stock that's overheated. We've got a strong uptrend, but we have negative divergence on the daily chart. And I think this stock's getting ready to roll over pretty soon. Once it does, then we'll have a good profit target down here at the long-term support. Upwork is the next trade. This is another gap fill. We, gapped up, I guess, in November of last year. Now we're moving up with lower momentum. So that's giving negative divergence. And I think a good gap fill trade could work out if this breaks below trend with high momentum or I guess an impulsive breakdown. SONO, another breakdown gap down trade, or another breakdown gap fill trade. Basically the same story. Not much to say. Good risk to reward ratio and a solid profit target. And with all these gap fill trades, I'm covering a little bit early just because, especially for ones like this, the gap's so obvious, people are probably going to be covering early. So I want the profit target to actually play out. And so I'm covering a little early. Uber, this is another trade where we consolidated for a good amount of time, broke out, gapped up and broke out, but we've got decreasing momentum with increasing prices. So that's another gap fill trade. Peloton, this one is one that's been really running for a long time without a break. And I guess there was a break here and starting in October. But aside from that, there's not a very good break in the run-up. So we're looking at a pretty good correction here if this breaks trend. Right now it's looking like it may be doing a back test of the trend line, but I haven't been too sure what the trend line is. There's three different possibilities here. So I would say probably something like this, where it's breaking down below trend. All three trend lines have been broken. Something like that for a trade. The other option is just to wait until the stock breaks below this level here. That's a pretty strong strong support level. So if it does break down below that, well, it's relatively strong. It's the strongest support level that you're going to get down to the next level down. So that should also be a good trade to take if we break down below that. Snap. This is a trade that, we had a gap up, a move up, and so we're looking for, oh yeah, and I guess negative divergence. So we're looking for this to break down and then gap fill. So this is another pretty good risk to reward ratio trade. Spirit Airlines is another gap fill trade. This one, gapped up in November, climbed up for a while. It's got, long kind of negative divergence. I wouldn't say this is definitely negative divergence because we didn't actually make a new high, but it was close to like a double top with decreased momentum, and it is starting to break down. I think a objective entry point would be basically a retest of this trend line. The next one is Zillow Group. This one has sort of just gone straight up with only one or two corrections along the way, or at least one or two significant corrections. Rising wedge, negative divergence. I think it's going to roll over and break down for a correction at some point soon. Revolve. This one is one that's basically gone straight up since, it's kind of been below this 2170 level. Once it broke out, it's gone straight up. It doesn't have strong negative divergence yet, but you're starting to see it. So if this does roll over, it's going to be a good risk to reward ratio trade with a clear support level to cover at. Redfin. This is one where after a consolidation and breakout back around November, it made basically a straight up climb, correction, didn't make it back above the trend line, and so now I'm looking for it to retest the trend line. If it does, then take the trade short and cover basically at this trend line back here. It could break all the way down to this level as well. So that's what I'm looking for that. Zoom, I am actually looking for a long trade on this one. It has made a big run up, but then it had a significant correction where I think this is a bull flag that's playing out to have the stock break out again. And it's actually already started to break out, is what it looks like. So what I'm looking for is a back test of trend, and then that's where I would enter long. If it doesn't back test and it just goes straight up, well, that's a missed trade, no big deal. And I'm looking for a profit target of like 50%. That comes from looking at the percentage that it ran up, somewhere within that range. A 50% run up from the last breakout, would put you about here. I might take part of my position and wait for, this full range to play out. Actually, you know what? I think the reason I did 50% was because of this. You have that this could be a breakout area, or seen as a breakout area, or consolidation and breakout area. So just to be conservative, that's the we're setting the profit target a little lower. I'll probably hold part of the position and hold that out for reaching the full maybe 100% gain. USFD. This is basically a trade I'm looking at. Another gap fill trade. You've seen like 5 of these so far. It's the same idea. Take the trade below trend, cover down at support here. AM, this is one that broke out, and I'm looking, because it did not maintain this trend line, or, well, it broke down from this trend line with negative divergence. Now I'm looking for a retest. That's where I would take a short position, and then I would cover here at this longer term support. BRP, this is a trade where I think we have the potential to break down here. I'm not really seeing, well, there's not really negative divergence, so it may take a while to play out. But if we do break this trend, then there's nothing below until this support level back here to stop the stock from falling. So that's just a really good risk to reward ratio trade. So if it does break down impulsively, I'd be looking at taking a short position and covering down here somewhere. JHG, this is another, gap up and climb, basically steadily climb stock. So I'm looking for it to fill the gap, break down, fill the gap. LMND, Lemonade, this is another one where it's basically gone straight up. It broke out from basically its IPO price, went up continuously, and we were starting to get negative divergence. So I'm looking for it to break down and basically have a correction at this 80-50 level. Rocket, this is a long trade I'm looking at taking. I'm not sure it's going to break out, but it is consolidating to make a big move. And if it does break out, then I want to take this trade because it's a good risk to reward trade, and yeah, have a solid percentage gain. XP, this is another sort of bull flag trade that I want to take. It's been consolidating for a very long time. It started to break out, and if it does a retest of trend, that's where I'll take the trade long, and then that would be a super good risk to reward ratio. ALBO, same thing. It's consolidated, broke out, and now it's either doing a retest, or it looks like it's setting up to do a retest. This may be just a flag pattern. And if it retests, I'll take the position long and for a profit target up here. So one thing to note is, especially for ALBO, if you look at the hourly chart, this looks a lot more like a bull flag pattern than, something that's going to break down and do a retest. So, well, let's just see what happens. I want to keep my risk to reward ratio at 3 to 1. So if we, at a minimum of 3 to 1. So let's just move this out of the way. And if we took the position up here, had a stop down here, you still have a good risk to reward ratio. So this is still a decent area to enter the trade right now. And if it breaks down, yeah, you lose a little bit more relative to this one, but I think the upside is still worth it to take that chance. NVT, well, I guess this is just a consolidate, breakout, and then break down trade. This isn't a gap fill trade, but it's similar to the ones that were negative divergence, trend, basically upward trend line. And it broke down, it broke trend, but it's doing a retest of the trend line. So we'll see if it pops up above. I think this would be something where you would watch the stock at the market open. If it depending on where it starts the day, if it starts the day right at trend, then probably take the trade. Maybe not. I wouldn't take the trade if it starts right at the open. I would probably take the trade if it starts at the open, then kind of ends the day in sort of a breakdown posture, or if it looks like it's breaking down as the day is closing, that's where I would take the trade. Okay, cold. This is another sort of consolidation breakout trade for this bull flag. I mean, this is kind of a bull flag pattern. I'm not sure. It's so messy. I don't know if you can actually consider it that, but it is a consolidation pattern where if it breaks to the upside, then it's going to run a good ways, I think, and give a pretty good risk to reward ratio. PK, this is another, gap up, climb for a while, and then fail trade that I want to take for the gap fill. AYX, this is a kind of funnel pattern trade where this has been consolidating in this range for quite a while, and then I think it's going to explosively break either to the upside or the downside. I think upside is more likely because this has been on an uptrend for a while. If it does break to the upside, then I'll take this trade long. And basically, the profit target is given something like, this is sort of the maximum profit target I expect, 130%. So if it breaks out right here and you go up 130%, just go inside of that some amount. That's my plan for a profit target. D-Dog, this is another funnel pattern trade. Same idea. If it breaks to the upside, I'll take the trade, cover up here. Lift. Now, this is a trade where I'm not sure what this is going to do. It looks like it's probably more likely to break down, which, well, if it doesn't break down and it breaks out, then I think it's going to move up here to the next resistance level, and that'll be a good risk to reward trade. And it will probably break out impulsively because it's been consolidating for a while. It may even have a short squeeze to accelerate its upward move if people are expecting it to break down. Okay, PS. This is another trade where basically if this breaks to the upside, you've got this huge gap to fill, and a support level up here somewhere where I would want to close my trade. And I apologize when I'm saying covering the trade for long positions. What I actually mean for a long position is closing the trade. Normally, I guess you say cover a trade when you're going short, borrowing shares to go short, and you say you're covering your position by purchasing those shares back. In a long position, it would just, I think, be closing the trade. Okay, so that wraps up my trading outlook for this next week. One thing you'll notice, I guess probably the biggest thing to note here, is that I'm looking at a lot more bullish trades than I was in previous weeks. And the reason for that is I don't want to miss out on market bullishness if I am wrong on this, this sort of being a market top. I think that, well, it looks like this is a potential area for correction, but how long will I have to wait before I know that's not the case? If I'm sitting here waiting for bearish trades to play out and they never play out, and this market keeps wandering up, sort of wandering at this level for 2 or 3 weeks, I think that's a lot of potential profit that I'll miss out on, especially considering how many breakouts have been happening recently in different stocks. if I pick individual tickers that have impulsive breakouts, then the way I see it is the worst that can happen potentially is if the market one day decides to break down, but the individual stock is in the middle of a breakout, it's more likely to just fail the breakout and go back down and sort of give a standard loss than an oversized loss that's, a scalp down that's 2 or 3 or 4 times my stop loss. I think that's very unlikely. And given this sort of risk to reward model that I'm using, I think taking that risk is worth it. I guess we'll find out in the next couple of weeks, but that's what I'm doing for now. Another thing I'll be doing is making sure I have a similar number of bullish and bearish setups ready to trigger if so that I have the potential to make money whether the market goes up or down. So anyways, thanks for watching. See you guys next time.